Hello, all you cyberites out there, and welcome to the BCB Cyber Series that takes on the tech stocks that can provide the cyber fuel we need to pursue our digital wealth passions. Today, we are returning to mega cap tech stocks this January 2021, and this month that means the world's largest medical device maker, Medtronic. Before we get there, though, as always, we offer this little reminder: the BCB Cyberway, we dig for the cyber fuel we need. We are always working to make sure the best of the best, those monster companies in tech, form a key portion of our wealth portfolios. For all these mega cap stocks, our core defining feature is that the market cap is over $200 billion. As always, though, we dig deeper still, looking for those companies that are pushed by incredible disruptive tech with a great story, not to mention having a solid base in the numbers. Before we dive too deep, though, we strongly advocate that we never act solely on anyone else's opinion, not even our own. Make sure we're all thinking for ourselves out there as self-definers and making our own decisions. In the end, the responsibility is on each one of us as individuals, so decide wisely. Jumping right in now, the BCB Cyberway, we cover 3 quick pieces of information so we can get moving on our day. First, we tackle the story to find out who and what the company is. Second, we look at the numbers, both positive and negative. And finally, we discuss our position on the stock. This is TS2B, Tech Stocks to Buy, Mega Cap Edition. Again, that means this week we're taking on Medtronic, the Dublin, Ireland device-based medical therapy maker, that world's largest medical device maker. The story for this company is simply one of the most well-run, well-diversified, healthy companies we've ever seen, particularly at the level of a mega cap in health and biotechnology. Not only is Medtronic diversified into 4 aspects of quality health business, that's cardiac/vascular, minimally invasive therapies, restorative therapies, and diabetes, the company is also diversified across markets seeking to build a strong base across all medical technology for the betterment of humanity. However, where this company truly excels is in its push to bring forth truly disruptive yet profoundly helpful technologies. With a large, well-qualified and respected emergent product line, the sky is the limit for Medtronic. As they say, they truly put the tech into medtech. They offer everything from big data set technologies to robotics, sensor technologies, machine learning, artificial intelligence. And in 2020 alone, they've released a number of products out. And they have many more in the next few quarters that are coming and well beyond. They are building out an incredible set of disruptive technology for this particular field that is going to offer great future growth drivers with top-end competition for ever-growing markets. As if being the best in class and built on a terrific pipeline that is the strongest in the company's history, they say, weren't enough, Medtronic has also broken through and could be considered the top-notch exemplar for all environmental, social, and governance world investors to look for, having been recognized for their ESG efforts by the likes of Fortune, Forbes, and Diversity Inc. Jumping to the numbers now, BCB Cyber loves to follow 5 specific metrics: revenue growth, forward price to earnings ratio, return on assets, operating margin, and debt considerations. Starting out, Medtronic is a bit of a rule breaker for BCB Cyber as the market cap is slightly under that $200 billion mark that we do look for. Here we see the current enterprise value at $176.86 billion and the current market cap at $161.13 billion. But that's not because we don't think it's not worth over $200 billion. We think that this is simply an opportunity that is currently undervalued. The price to sales metric right now is a 5.80 and the price to book is a 3.21. Both are about in line with where they were in January of 2020. Perhaps more importantly, Medtronic has that forward PE that is starting to rebalance to where it was before the global health crisis began, as are those price to book and price to sales ratios that we mentioned. The market picture for such a large, impactful company has definitely become more clear, and despite the chaos in the world, does appear to be settling in. Medtronic does provide consistent quality in the revenue stream that we see here, circling around that $30 billion mark. And the company has consistently stayed between $28 and $32 billion from 2017 through 2020 that we see here. One area where the company is offering a little bit of doubt to us investors is within the realm of debt, but we'll get there in just a second. The current operations for this company demonstrate a return on assets of 2.73% and an operating margin in the trailing 12 months of 14.63%. That's a great operating margin for a great company. This is profitable and well managed. Again, that one area we're a little concerned about is debt. They do offer a nearly 2-to-1 debt-to-cash ratio. Here we see a $30.01 billion debt in the most recent quarter to $14.28 billion in total cash in the most recent quarter. So we do need to be careful about that and keep an eye out for this particular aspect of this wonderful company. However, we do see that they do have a strong cash flow. Operating cash flow for the last trailing 12 months was $6 billion. Again, that balance sheet does show this little bit of concern. But we do see also a quality cash position and that strong operating cash flow of $6 billion. Once again, we do see that the total debt has doubled the current cash position and does require that watchful eye. We cannot stress that enough. Here we see it broken out a little bit more. We see the operating cash flow where it is solid despite global issues. However, we did also see that Medtronic offered an issuance of debt this year to help cover that for us. The free cash flow maintains a strong position at nearly $5 billion. Diving deeper still into the debt picture, we see that in the last 12 months that they did have that debt issue, and we do need to make sure that we are following this as we move forward and continuing to build our position in this wonderful company. Despite the health crisis, Medtronic did manage to navigate this storm with that strong cash flow position once again, and it will allow us to handle it present and future when it comes to challenges. We flip now to the BCB Cyber Take. The BCB Cyber Take, as we look at the snowflake analysis here, provided by Simply Wall Street, we look at a company that BCB Cyber sees as a awesome growth dividend. Analysts also see this as a strong dividend player. Simply Wall Street says it's an established dividend payer with an adequate balance sheet. We see so much more here with that established pipeline that is only growing by the day that we talked about earlier. In addition to that, they are a leading company when it comes to all the ESG metrics that investors are looking for today, and they've got a great cash position. As of this past Monday morning, 1-18-21, happy Martin Luther King Jr. to everybody. The BCB Cyber portfolio had a position of 3.48% in Medtronic with a cost basis, that is average cost, of $91.35. That's $91.35. This is definitely a stock worth buying at the right price and one that BCB Cyber believes to be the right fuel for the fire. In fact, we'll be willing to say it's one of the best disruptive plays in all of biotech. Definitely a best-in-class kind of company. Analysts would definitely seem to agree as Morgan Stanley recently gave Medtronic an upgrade and many others are recommending a buy, particularly given the fact that the stock price does seem to sit in value territory as we see here. It is on the concentrated buy side of things, so if you guys are interested, this is certainly one to look at. And currently we do see that price of 116-81, that's $116.81. This past Monday, it was undervalued compared to the average analyst estimate. Remember, we're just like the masses struggling to make ends meet and build our future, so we start building and keep doing our homework. This is just what we need to start on our journey towards cyberizing our lives. BCB Cyber believes in the potential for this risky tech innovator and loves the story. Risky again only because of that debt position. However, this is definitely a stock worth buying at the right price. Like we said, we previously had called out before and a couple months ago, $115 a share. We're now moving that to $120 a share given this analysis today. Remember, we at BCB Cyber balance our perspective and cyberize our wealth over a longer term of 5 years or more. We are definitely looking to be adding to our position with Medtronic to make the right portfolio proportions of between 4 and 5% and at the right price. Medtronic definitely puts the tech into medtech for BCB Cyber. Remember, as always, think for yourself, do your own homework, and cyberize your life with the best in disruptive tech. Learn more in our wealth section and dive deeper into establishing the baseline on bcbcyber.com.